For the last 10 years, I've been a full-time trader, and I spent about $120,000 on online courses. But the result was $300,000 loss that wiped out my whole account. After losing everything, I rebuilt my entire strategy and process from scratch. Now, I'm an 8-figure trader, taking profits of $3,000, $5,000, even $30,000 a day. No complicated indicators needed. It's super simple. And the strategy I use is crazy accurate trades on gold, Nasdaq, and Bitcoin. In this video, I will show you my exact entry points, take profit levels, and real trade examples I actually use. And if you understand this and keep doing this, you won't fail like I did in the past. You will become a profitable trader instead. This simple, powerful strategy will boost your win rate, so let's get started. Every morning you open your charts and your mind gets crowded. You stare at the market thinking, what should I trade today and where do I enter? Then you draw one random support line, tell yourself price will bounce here, and you smash the buy button. And the result? In reality, the chart suddenly rips the other way. You can even cut the loss in time. And you get stuck in the trade, and day by day, your account balance keeps bleeding out, while your anxiety gets bigger and bigger. And in this process, most beginners start studying candlestick patterns, support and resistance, moving averages, all these technical indicators, but in the real market, they keep getting tricked by fake signals over and over. Is the problem the technical analysis tools I studied? No. There are so many great indicators, like candlesticks, moving averages, Bollinger Bands, RSI, MACD. The real problem is you don't know which indicators to use or how to combine them. If you trust only one candle pattern and get caught against the main trend, your losses can grow very fast and blow up your account. But with my Bollinger Bands strategy, I've made tens of millions of dollars. For beginners, Bollinger Bands are great because they are simple but show the core of the market in a very clear way. And there's a clear rule called a band touch, so making decisions becomes much easier. Now, you need a tool that actually makes real money. Even if you are holding a gun, if there are no bullets, it's useless. Same with Bollinger Bands. If you don't use them the right way, your losses will just keep repeating. Bollinger Bands are like a machine gun. If you use them properly, they give you insane firepower. But to unlock the real power, you need accurate aim, direction analysis, the right ammo, your position size, and perfect timing for entry and exit. How many traders actually know how to use Bollinger Bands properly? Most traders just think if price touches the band, I buy or sell, and they stop there. What really matters is how you use this in your trading. The easiest way to understand Bollinger Bands is to think about a rubber band. When price moves too far, too fast, it can snap back like a rubber band. So many beginners just think band touch equals reversal signal. But if you pull a rubber band too far, it breaks. And when the trend is strong, price keeps breaking above the upper band and running. In the end, Bollinger Bands show you two key things. First, when price stretches too far, it can snap back like a rubber band. Second, when that stretch actually breaks, the trend can explode in one direction. The problem is, most traders only understand the first part. John Bollinger suggested two classic ways to trade Bollinger Bands. First, reversal trades at the upper and lower bands. Second, breakout trades from the Bollinger Band skis. The reversal style is simple. When price touches the upper band, you sell. When it touches the lower band, you buy. Sounds simple, right? The moment the chart hits the upper Bollinger Band, we go short. When price touches the lower band, we go long. This strategy is strong, and the numbers back it up. More than 90% of the time, price that hits the band goes back inside. This bounce back from the upper and lower bands works well on many markets. That's why so many traders use Bollinger Bands. So what happens when price doesn't come back inside the band? but breaks through the Bollinger Band and starts a strong trend. That's when we treat it as a Bollinger Squeeze breakout setup. With the squeeze breakout, you either chase the breakout move or wait for the pullback after the breakout and then enter. Let's look at this chart. Price starts to move strongly and the tight Bollinger Band suddenly widen. When the Bollinger Band squeeze and then open up again, it tells us a trend can start in one direction. If a strong bullish candle breaks through the band, we enter long. That's the classic Bollinger Squeeze breakout setup. On this chart too, the squeeze Bollinger Bands start to expand again and price breaks through the band to the upside. In this case, we treat it as a breakout and go long. But if the bands open up and price trends hard to the downside instead, we watch that break and go short on the move. Band reversal and squeeze breakout might look powerful in theory, but when you actually trade them, real problems show up. Weakness of the upper-lower band reversal setup is that it ignores the bigger trend. Here on the Nasdaq 1-hour chart, price just touches the upper Bollinger Band. There is no strong bearish candle in that area. So you think it will reverse soon and enter short. But in reality, this zone is the middle of a strong uptrend on the bigger time frames. The daily and weekly charts are both in a strong uptrend. And price keeps breaking above the upper band and pushing higher, which makes this area the perfect place to get trapped at the top. On this chart, the Bollinger Band stayed tight for a while. So you think, okay, a strong trend in one direction is coming soon. And you wait. After a moment, the bands expand and big candle breaks out through the Bollinger Band. It looks like a clean breakout with a powerful candle behind it. So you decide this is the breakout zone and enter long. But then the bands widen and quickly squeeze again, and price drops back to the level before the expansion. Because you entered outside the Bollinger Band, when price comes back inside the band, your position just sits in loss. What about this chart? Here price is touching the lower Bollinger Band, and because price has been reversing again from the upper and lower bands before. This time you just see the lower touch and jump in long without thinking. But in reality, the lower side had no support, no demand zone at all. The downside was completely open, and the time you entered was right before a big event like an interest rate decision. So price just breaks straight down through the Bollinger Band, and you end up in a spot where you can't even stop out cleanly. When you use this basic Bollinger Band strategy by itself, it makes you ignore the bigger trend, major events, and key support and resistance levels. So, if you just think, when price touches the band, I enter, you will end up losing right in front of the bigger trend. To cover this gap, you need to find the real entry zones that simple band touches can give you. From now on, I will share my own Bollinger Band strategy, tested for years in real trading. And if you master just this one method, your win rate will jump up fast. Bollinger Bands are way more flexible than most traders think. You can set them using 4 price points: open, high, low, close. And 3 types of moving averages, simple, exponential, weighted. So there are 12 different combos you can use. On the higher time frames like the daily, 4-hour, and 1-hour chart, I just stick with the default, simple on the close. But when I'm day trading or using fast minute chart, the story is completely different. When I set up for buy positions, I use a combo of high EMA and high WMA. And when I set up for sell positions, I switch to low EMA and low WMA. Let me put this on the chart for you. First, let's set up the buy side. First, add 2 standard Bollinger Bands to the indicator window. Then, take the first band, change the price base to high, and the moving averages to EMA. Next, take the second band, again set the price base to high, but change the moving average to WMA. And finally, change both band colors to green. So now you can see 2 green Bollinger Bands layered like this. on your chart. Now, let's set up the sell side. Just like before, add 2 standard Bollinger Bands to the indicator window. For the first band, change the price base to low and the moving average to EMA. For the second band, keep the price base on low but switch the moving average to WMA. Then change both band colors to red. Now you can see 2 red Bollinger Bands forming like this on this chart. I also separate the buy side and sell side visually, and I fill the space between the 2 bands to make one colored band. Much easier to see, right? In the green band, we only take buy positions, and in the red band, we only take sell positions. If you want this indicator, hit subscribe and leave a comment below. You'll get even more indicators and trading insights in the upcoming videos. When I set the buy side, I base it on the high because high-based Bollinger Bands react more to the top of the candles. So when price pulls back, it tends to touch around the upper band a bit faster than a normal Bollinger Band. This is an aggressive setting to avoid missing buy entries in an uptrend. When I set the sell side, I base it on the low because low-based Bollinger Bands react more loosely to the bottom of the candles. So when price bounces, it reaches the lower band after rising a bit more than with a normal Bollinger Band. This is a conservative setting to catch clear sell entries in a downtrend. If you really master this band setup, you can catch much stronger signals in the market than any band strategy. When I trade, I first check the bigger time frames, the 1 hour, 4 hour, and daily chart. Here I use the default Bollinger Band and the 20 moving average. I check direction with 2 things: when price touches the lower band and comes back inside the band, and how strong the candles are when they break through the Bollinger Band. At the same time, I watch the 20 moving average direction. If the moving average is pointing up, I look for buys. If it's pointing down, I look for sells. Of course, the most ideal case is when the 1 hour, 4 hour, and daily are all pointing in the same direction. But for me, even if it's just one of those time frames confirm the direction, that's already enough. That alone gives me a solid reason to hunt entries on the 5-minute chart. When the higher time frame direction is clear, we drop down to the 1-minute or 5-minute chart. Now we use the buy band or sell band we set earlier. If the higher time frame is bullish, we only enter when price touches the green band. If the higher time frame is bearish, we only take positions from the red band. The key is simple. The signal must come from the band that matches the higher time frame direction. When I trade in a trend, I make my entry points more precise by using the 20 moving averages with the bands. If the 20 MA is pointing up and price touches the bottom of the green buy band, I take a buy position there. If the 20 MA is pointing down and price touches the top of the red band, I take a sell position from there. Let's look at this chart. On the 1 hour chart, price touches the lower Bollinger Band and then closed back inside the band. And on the 5-minute chart, the 20 MA is sloping up and price touches the bottom of the green buy band. If we take a buy there, you can see price move up more than 80 points and continue the original uptrend. Last month, this was the Nasdaq daily chart. Price touched the upper Bollinger Band and left a long wick back inside the band. So I treat that as sell side in control and then drop down to the 5-minute chart to hunt for a short entry. In this area, the 20 moving average is sloping down and price touches the top of the red sell band. You see a long wick rejecting from the top of the sell band. So if we enter a short here, price drops more than 130 points. Even with just this simple but powerful strategy, if you set clear betting rules and stop loss rules and trade with them, you can take out tens of millions in profit. But even when you follow the big trend like this, if price doesn't come back inside the band, that area can still turn into a big loss zone for you. For example, even in these buy and sell bands, you can still get a squeeze breakout. Price can hit the top of the red sell band and instead of coming back inside, break out hard to the upside or hit the bottom of the green buy band and just drop with no bounce at all. You are probably thinking, so are these zones just dead zones for my trades? From now on, I will show you the methods that fill this gap. And if you really understand today's lesson clearly, you will be able to catch over 90% of the turning points and breakouts that simple Bollinger setups always miss. When price pierces the Bollinger Band, how do we tell if it's a breakout or a turning point? Before I break this down, let's first understand the candle itself. Candlestick patterns show in the clearest way how buying and selling psychology is changing on the chart. We only have two basic candles, bullish and bearish. A bullish candle starts at the open down here and closes up above at the close. That means buy pressure pushes the price higher. The wick on the top shows how far price pushes up. The very top of the wick is the high. The very bottom of the wick is the low. A bearish candle closes below the open. Price drops by the size of the candle body and finishes lower. The lower wick is the trace of the low it printed. Candles come in many shapes, and each shape shows the trader psychology during that time. Let's look at this candle. It's a bullish candle with a long lower wick. Sellers pushed the price down deep at first, but buyers came in strong and ripped it up to close above the open. So this shows price can reverse from here. If a price touches the lower Bollinger Band and we get a bullish hammer with a long lower wick like this, the chance of a reversal is very high. We upgrade our Bollinger Bands into buy and sell bands first. Then we filter them with the moving averages. And on the top of that, we add one more filter with the candle. So the chance of closing the trade in profit goes up massively. Let's compare these two charts. In both of them, price has touched the upper Bollinger Band. But on one side, we have a strong candle with a big body and no wick on top. And on the other side, we had a candle with a long upper wick. So what happens? After strong candle, price rips up and broke through the Bollinger Band. But after the long wick candle, price reversed from that level instead. Now, did you notice what's really happening here? From here on, I will show you how to tell breakouts from reversals inside the buy band and sell band. If you look at this chart, on the 1 hour and 4 hour, the moving average is rising steeply, showing a strong uptrend. On the 5-minute chart, price takes the lower buy band and wicks back up from there. So what happens next? First, it gives you around 20 points of profit. Then another hammer candle forms right at the bottom of the green band. If we enter there expecting a double bottom, that move can give you more than 120 points. On this chart, we have a doji candle at the upper Bollinger Band on the 4-hour time frame. You can see price getting strongly rejected from the top. So on the 5-minute chart, we only look for sell entries. And when price touches the top of the red sell band and wicks down from there, if we enter short at that point, you can see price drop more than 180 points. On the other hand, the breakout buy and sell bands look for the moment price breaks hard through the band, and I confirm the breakout by checking if price has also broken that day's high or low. In this chart, on the 1 hour, price touched the lower Bollinger Band and closed as a hammer candle. Then on the 5-minute chart, price touches the top of the green buy band with a strong bullish candle, and at the same time it breaks that day's high. So we treat this as a breakout and take a buy position here. And the move that follows gives more than 40 points of profit. On the 1 hour, price hits the upper Bollinger Band and wicks down from it. Then on the 5-minute chart, it breaks that day's low and strong candle rips through the bottom sell band. So we read this as a breakout and take a sell position there. And after that, price trends down more than 100 points. The core of a Bollinger Band breakouts comes down to two things. First, you catch the moment price breaks that day's low or high. Second, you don't just watch price go through the band, you watch which candle and how hard it pushes. If you can really read just the 3 buy and sell band cases from today, you will trade on completely different level than any simple Bollinger setup. But this is not all. If you hit subscribe right now, in the next video, I will show you how to use two Bollinger Bands to lock in sniper entry points. Just press it and leave it there for now. If this doesn't make you real profit, you can always cancel later. But if you truly understood today's lesson, you won't even want to cancel. In the next video, you will be the first to watch the strategy that can seriously flip your account. Even if you know how to use Bollinger Bands, it can still feel scary when you actually hit the entry button, because there are a lot to study and it only becomes truly yours after real trading experience. So from now on, I will share trading tips that experienced traders can use right away in markets. And the first tip is to split your entry timing instead of going in all at once. For example, when the US stock market opens, volatility up and down gets much bigger. So when a Bollinger Band squeeze turns into an expansion, real buy and sell position hit the market hard. Last September, on the 1-hour chart, the Bollinger Bands stayed quiet during the Asian and European sessions. But when the US session opened, the bands started to expand and a strong bearish candle broke through the lower Bollinger Band. If you had entered a squeeze breakout there and just held until the US close, you could have made more than 100 points in profit. When US CPI or jobs data drop, volatility spikes and the Bollinger Band expand hard. If you catch the shift from squeeze to expansion and enter where the crowd creates the new direction, you can maximize your profit on that move. Last January, right after the CPI release on the Nasdaq 1-hour chart, the Bollinger Band went into a big expansion, and a strong candle with no wick smashed through the upper Bollinger Band. And after that, price kept moving hard in the same direction as the CPI candle close. Usually, I stay on the sidelines for about 1 hour after the economic data drops. Then I wait for the clear direction and take my entry from there. It's a safer, compound trade that can still catch a big move with high odds. Another tip is to trade only in the direction of the main weekly trend. For example, on the Monday and Tuesday, we check the weekly chart and read each direction. If last week closed with a strong bullish candle, this week we focus on buy setup and look for wrong opportunities first. But if the weekly candle closed bearish or with a wrong lower wick, there is a high chance the downtrend continues. So we mainly hunt for sell entries and keep our stop loss tight on any buys. In the first week of last November, Nasdaq was in a strong uptrend. After checking the weekly chart on the November 21st, if you had entered at the hammer candle that touched the lower Bollinger Band, you could have taken close to 500 points in profit. If you're a beginner, build the habit of trading in the same direction as the previous US session after you've checked each move. Because the next day, in the Asia and European session, the chance of the main trend fully reversing is very low. So if Nasdaq closes strong to the upside in the US session, you only hunt for bullish signals that follow that uptrend in the early Asia and Europe sessions. Looking at this chart, you can see the US session show up strong uptrend and then close up at the top. Then, the next day in the Asia session, a hammer candle forms as price pulls back to the 20 moving average. We treat this drop in Asia as just a pullback, not a trend change. We don't fight the US uptrend. From there, price bounces almost 300 points back to the upside. So, should we ever trade against the trend? When the trend is really strong, even if price touches the upper band, that's not a real sell signal. Imagine a small fishing boat in the ocean. If the waves are high and the current is pushing hard in one direction, and that tiny boat keeps trying to go against it, it eventually sinks. It's the same in a strong uptrend. If you keep forcing sales just because price tapped the upper band, you are fighting the market trend. And most of the time, you are just staking stop loss after stop loss. To avoid trading against the trend, always check the current trend first. Every day or before you trade, look at the weekly and daily chart and see if the market is an uptrend or downtrend. If the 20 and 60 moving averages are sloping up, you treat it as an uptrend. If they are sloping down, you treat it as a downtrend. As a beginner, only hunt pullback trades inside strong trends and only enter in the direction of that trend. On this chart, the 20 and 60 moving averages are rising steeply and the uptrend is very strong. Then, in the US session, price pulls back to the lower Bollinger Band. If we take a buy position there, then we can give over 400 points in profit. If you ever feel you have to take a counter-trend trade, even in an uptrend, because the upper band or resistance zone or candle makes you think this is the top, then set a very tight stop loss line before you enter. So even if it fails, you can jump out fast with a small loss and move on. These are my recent trades. On the 21st, I saw price touch the lower Bollinger Band on the 2-hour chart. Then, on the 1-hour chart, a hammer formed right at the bottom of the buy band. So I entered wrong there, and that gold move ran almost 100 points and paid me about $450,000 in profit. On the 7th, I spot a hammer candle near the Bollinger Band on the 1-hour chart again, dropped it down to the 10-minute chart, and entered at the bottom of the buy band. And I closed that trade for a total profit of around $300,000. Every single trade I take is based on Bollinger Band strategy I share you today. You might thinking just knowing today's Bollinger Band strategy in theory is enough. But in reality, you have to trade every day and build your trading muscle. Just watching with your eyes and learning versus actually stepping into the market yourself and testing it are night and day. I still trade every single day without missing even one day because that's how I keep testing whether my strategy really works in the market. Trading muscle comes from repeated weird trades. So take today's Bollinger Band setup and apply it in trading at least 2 or 3 times every day. If you want to trade every single day, it's way better to use a broker with low spreads and no overnight fees. The platform I use is in the description below. If you sign up through that link, you get both tight spreads and swap-free trading. Try it out with a small account first, no pressure. One of my biggest goals is to become like Richard Dennis. I spent $1,000 to $10,000 buying strategies people don't even use in trading and ended up losing all my money. I started this channel so you don't get trapped by fake strategy like I did. My mission is to build 10,000 traders in the next 3 years who each make over $100,000 in real verified profit. So hit the subscribe button now and don't miss any of the video coming next. Thank you.